The enterprise AI revolution is here, and the numbers are staggering. We're looking at a $97 billion market in 2025 that's growing at an explosive 25 to 30% annually. But here's what really matters. This market is projected to reach between $229 billion and $1.55 trillion by 2030. That's not just growth, that's a complete transformation of how businesses operate. Let me break down why this is happening right now. First, generative AI and agentic systems are becoming enterprise ready. Second, cloud scalability has reached a tipping point. And third, the ROI is undeniable. Companies are seeing $3.50 return for every $1 invested in AI infrastructure. Now let's look at the infrastructure landscape. The hardware layer, dominated by GPUs and TPUs, is growing at 23% annually. But here's the shocker. NVIDIA controls over 70% of the chip market. They're not just leading, they're dominating. On the software side, cloud-based platforms hold 48% market share today, but they're projected to reach 71% by 2035. And we're seeing massive $500 billion investments in multi-cloud strategies, like the Google OpenAI partnership. But who actually owns this market? Let's look at the 2025 market shares. AWS leads with 32%, thanks to their scalable services and Bedrock platform. Microsoft Azure follows with 22%, heavily leveraging their OpenAI integration. Google Cloud holds 11%, but don't underestimate them. Their Vertex AI and TPU technology are massive differentiators. And then there's NVIDIA. With 70% of the chip market, they're the silent giant powering everyone else's AI ambitions. When we look at the AI models themselves, the landscape is equally fascinating. Anthropic's Claude leads with 32% market share, dominating in coding and reasoning applications. OpenAI's GPT-4o and Google's Gemini each hold 20%, with OpenAI focusing on general Q&A and Google pushing multimodal workspace integration. Meta's Llama holds 9% as the open-source champion for cost-sensitive deployments, while other specialized providers like Cohere and Mistral capture the remaining 19% with domain-specific solutions. But where is all this AI actually being used? Customer support leads with 49% adoption. Think intelligent chatbots and automated support systems. Marketing and sales come next, delivering that impressive $3.50 ROI through content generation and personalization. Most importantly, 72% of enterprises are now using AI for tactical IT tasks. This isn't experimental anymore, it's operational. Now let's talk growth trajectories, because this is where it gets really exciting. NVIDIA is experiencing explosive 114% year-over-year growth with $130 billion in fiscal year revenue. Microsoft Azure is growing at 34%, Google Cloud at 32%, and Oracle's cloud infrastructure is surging at 77%. Even AWS, the established leader, maintains a solid 17% growth rate. Looking ahead to 2030, the hyperscalers, AWS, Azure, and Google, will collectively control over 65% of the market. NVIDIA will maintain their chip dominance with 60 to 75% market share. We'll see Anthropic and Google each grow to 25 to 30% in the model space, while open-source solutions like Llama will capture 20% of the market. Geographically, North America holds 37 to 42% of the market today, but APAC is projected to take the lead post-2027. So where are the best investment opportunities? For high growth, look at NVIDIA with their chip dominance and 114% growth, and Oracle with 77% cloud infrastructure growth, though these come with medium risk. For stable investments, AWS and Azure offer proven enterprise adoption, while Google Cloud provides strong 32% growth with lower risk. The emerging opportunities are in open-source models like Llama and Mistral for cost-sensitive markets and specialized AI providers for domain-specific solutions, though these carry higher risk. The key risks to watch: supply chain disruptions, regulatory challenges, and the constant threat of technology obsolescence in this rapidly evolving space. Here's the bottom line. AI infrastructure has become the cornerstone of enterprise digital transformation. With 25 to 30% annual growth through 2030 and proven ROI, this isn't a trend, it's a fundamental shift in how business gets done. The strategic imperative is clear. Invest in hyperscalers, specialized chips, and innovative AI models. The companies that build their AI infrastructure today will dominate their industries tomorrow. The transformation is underway, and the opportunity has never been clearer.
What's your take on the enterprise AI infrastructure market? Are you betting on the hyperscalers, the hardware providers, or the model developers? Share your investment thesis in the comments below. And don't forget to subscribe for more data-driven market analysis.